Good evening, everybody. Dear members and guests, both here in the audience and online, welcome to the first episode of the South Asia Seminar Series 2025, now in its fifth year, and thank you for joining us. Let me begin by acknowledging the traditional owners of the land on which we meet today. I would also like to pay my respects to elders past and present. My name is Prakash Mirchandani, a council member here and co-producer of the series, along with my fellow council member and good friend, Dr. Mike Moynard, who will be your expert moderator today. Today's topic, as you all know, is all about the Indian economy and the present and future implications for Australia and the Indo-Pacific in general. We are very lucky to have two experts with us today. Dr. Tirthankar Patnaik, he'll be up here soon, Chief Economist of India's National Stock Exchange in Mumbai, joining us on Zoom. And Professor Pushkar Maitra of Monash University, right here on the podium. Your moderator, Dr. Mike Moynard, is, in addition to being a council member here, an academic fellow of the Australia-India Institute. And it's now my pleasant task to hand over the proceedings to Mike.
Welcome. I hope you enjoy tonight's seminar. It's just by way of introduction, the AIIA Victoria had a study tour to India in February, March this year. And during that tour, we went to Delhi, Agra and Mumbai for 10 days. And during that time, we met with a number of Indian think tanks. We met with Australian companies that are doing business in India. We met with the Australian High Commission in New Delhi and also the Australian Consulate in Mumbai. And so we, in a very short time, tried to give the participants an understanding of the new India. And one could spend 1,000 years, I think, going through India without fully really understanding it. We had 10 days. But during that time, we were able to meet with some really wonderful people, but also some wonderful institutions, and one of which was the National Stock Exchange. We're very, very pleased to have the Chief Economist of the National Stock Exchange with us this evening. So again, by way of introduction, in the current economic climate, the best that can be said is that uncertainty will be with us for some time. The American drive to change the world's economic narrative will affect assumptions about growth, sustainability, markets, and investment in the short to medium term. Already, alliances between nations regarding their exports, imports, and investments are undergoing significant shifts. In our current markets may not be necessarily in everyone's self-interest. The image which could affect Australian relationships is the rise of India and the potential for a closer bond between our two countries. But what do we know about India's economy and its growth trajectory? Tonight, we examine the economy and consider the implications of the current US policies on both Australia and India. Could they result in a closer economic relationship between India and Australia? Our two speakers today will examine the potential opportunities for our two countries and give us some background to an economy which we should know more about, and hopefully at the end of this seminar, you'll have the opportunity to see some of the interesting changes that are occurring in the Indian economy. So our first speaker is Dr. Tirthankar Patnaik, who is the Chief Economist at the National Stock Exchange of India. He has decades of experience in the Indian economy and markets, macro and portfolio strategy, academic research, and corporate governance. He has a PhD in philosophy and financial economics at IGDR and holds a bachelor's degree in mathematics and a master's degree in statistics from the University of Madras. I don't think we could have a better speaker to be able to give us an understanding of the Indian economy and implications for the future. With that, I'd like to introduce Dr. Patnaik and ask him to address us. Thank you.
Thank you, Mike. Good evening, ladies and gentlemen. It's a pleasure to be here. And it was a pleasure meeting Mike and Prakash on their visit to Mumbai. And I do hope, while it will take a millennium to understand India, 10 days was fruitful enough to get some idea about the country. My role here is over the next 20-25 minutes or so to give you a quick background on what are the numbers for India, how big India has become, what are the challenges, what are the opportunities, and I shall end with a little bit of a little bit of a deep dive on contemporary issues that the country is facing at the moment, the Indian economy is facing at the moment. So I would basically talk about four topics here. Pardon the last one, it is the fourth topic on contemporary dynamics. I will speak about the India story first, then look at developments in the last 10 odd years. And in the third part of my presentation, I will speak a little bit about what is the Indian market all about, how is its reach, and how has it been, in terms of participation by Indian retail investors at the National Stock Exchange. Given our place in the ecosystem, we are in a unique position to provide some insights on Indian retail investors, and I shall endeavor to do just that. And at the end, as I said, I will speak a little bit about contemporary trade dynamics. So the India story, though. So this, ladies and gentlemen, is what India is at the moment. This is basically a collection of some important numbers for India. And we wanted to show you how it is now versus what it was a decade back in terms of size, in terms of GDP, in terms of inflation, in terms of spending, and in terms of some macroprudential numbers like current account deficit and forex reserves. And what's visible here is that the Indian economy is large. It has become, thanks to growth of around 6.5% in real terms over the last nearly 3 decades. The Indian economy is now the 5th largest economy in the world and soon to be 4th, as per the IMF's numbers. It has a nominal GDP of roughly just shy of $4 trillion. This gives it a per capita income of just shy of $3,000 US. So while that still keeps India as one of the poor countries in the world, given the low per capita income, but the size and scale of the economy now is meaningful. And as I've said, IMF projects India to now contribute to about a 6th or a 7th of incremental GDP growth now. Inflation, long the bugbear of Indian policymakers, is reasonably under control at the moment. This is 2024 numbers. At the moment, it's around 3%, very close to numbers we see in Australia. Current account deficit, again, a big problem earlier, thanks to India's big current account deficit and also a perennial trade deficit that India is forced to run thanks to its, at least on the merchandise trade front, is now somewhat under control. So from 4.8% of GDP, we are down to less than a percentage of GDP. Forex reserves, always a bulwark of comfort for an economy which does not have an open capital account, even now, is around $700 billion, the 4th largest in the world. So India is also one of the big FDI destinations of the world, with gross FDI of over $1 trillion in the last 25 odd years. So this is the size and scale of the Indian economy. I will speak a little bit about other sectors now. So specifically, if I look at agri, industry, and services, so just to give you some sort of a background, India, when it had independence from Great Britain in 1947, India had roughly half of its economy coming from agriculture, and about 48 odd percent of the economy was agricultural output, and that had been the case for maybe 2 millennia earlier. Over the last 70 odd years, agriculture's share in the economy has come off, primarily because the other sectors, industry and services. By the way, industry has remained around slightly less than a third of the economy. The rest is all services. So services sector has picked up significantly. Today, it contributes to nearly 2/3 of the economy. And these are some of the things that India has in terms of growth. So, services growth as a share has increased, from a pre and post COVID perspective. And the number of new companies that are coming in India at the moment, whatever new business activity comes in, services sector is responsible for a major part of those companies. So new companies, about more than 2/3 are from the services sector now. And the expectation is that even going forward, services sector is likely to remain, do quite well. And in terms of this growth, what has that led to? So if you notice two parts. So India's trade with the world has always been higher in merchandise goods terms, of course, and it remains so even now. But when you look at growth over the last 3 odd decades, the slide here shows how services now have become incrementally far more important. So the 3-decade CAGR, it's a very long time series, is about 10% for goods, but nearly 15% for services. And what has that led to is that India is now the 7th largest in services trade globally. And the share in services trade is larger than the share in merchandise exports also. So clearly, services are the big, the sort of opportunity for India. FY24, we have a fiscal year, begins in April, ends in March. So FY24 figures were about $340 billion. That was the services number. And yes, and what do we do in terms of services? Telecom, business services. These are just some examples of what India does in terms of from a services perspective. And I've also shown how India, these numbers compare with the traditional merchandise exports that India has. So India imports a huge amount of crude, by far the largest item that we have, and closely followed now by electronics. Indians love their electronics now. But India also exports petroleum products. So there's a value add, element here. And you can see how those numbers have increased. In fact, interestingly, the crude import figures have come down over the last 10 years. Nothing has happened there, but petroleum exports have actually increased significantly. So from a trade perspective, the story is that India is reasonable on the merchandise trade perspective. Things are better, but on services, India gets a slightly higher score, in terms of trade. And one example of what India does is also, thanks to its large English-speaking population. Most Indians don't have English as a first language, but English is taught universally in the country. Just in terms of numbers, India is a big country, ladies and gentlemen. India has 1.4 billion individuals, the largest, 1.4 or 1.45. We're going to have the census sometime around next year. And, in this, we have nearly 250 million students. So this is large, and English is taught to a very large number of people, which this is one of the byproducts that India has the world's highest number of GCCs. So these are the markets where India is doing very well. So the number of GCCs is around 1,700 now. So the expectation is that over the next 5 odd years, This number is going to rise significantly and contribute to nearly $100 billion in terms of a market size. High-tech manufacturing is also sort of improving in India. India is not traditionally known as a place with very big, presence in manufacturing, but the and this spend is actually growing. The big change that has happened in the last, I would say, very close future, very near future is that Indian defense is doing quite well. For those of us who look at the markets, the defense sector has done very well. The listed space in the defense sector is doing very well in India. So the idea here was not to explain the traditional way of looking at India, agriculture, industry, composition, growth. Those numbers are there with us. I just wanted to show some important points where, because the title is "Do You Know India?" These are things that India is doing, and these are not necessarily known and appreciated outside. So, for instance, 1 out of 7 iPhones are now made in India, manufactured in India. They're not, of course, the value add remains quite low at the moment, but this is a sort of beginning. A few years back, all iPhones were imported. Things are changing at the moment. And in a sector like defense, you have 74% foreign direct investment allowed now. So in terms of cooperation as well, this does quite well. EV sales have gone to about 2 million. Numbers are still quite low. Penetration today is just about 8%, but it's rising quite fast at the moment. And one thing that India has done reasonably well is that technology, specifically software, given the capital constraints that an economy of this nature has, Indian household wealth, you would imagine, is low. While the total numbers are large, the household wealth in an aggregate is reasonably low for a country of its size. But what has happened is that technology has been used effectively with both market-driven forces and a policy imperative. So Indians use a lot of data. India has Aadhaar, which actually means foundation. India has the world's largest biometric mapping at the moment. India also leads in terms of digital transactions, thanks to the unified payment interface. And what has this done is that it has allowed a number of policy-led changes, policy imperatives being done through technology with minimal leakage. In a country like India, this is always the case, that fiscal impulses do not see their intended objectives simply because of a lot of leakage in the system. But thanks to technology, a lot of lot of loopholes have been sort of plugged. It is a young country. Now, India is a young country. There are two parts that I wanted to quickly discuss here. India has a median age of just 28 years. So it's not the youngest country in the world. There are many young countries as well. But India has the scale that other countries simply don't, leaving China. And the median age in China is significantly higher, as you can see in the top right part of my chart. And on the left side, you get a sort of a sense of how big India is in terms of people. So you have some countries over there. And this is not an opportunity forever. The demographic window is limited. So India has to do things better over the next decade or so to make the most of the opportunities that global growth sort of provides, and India becoming a larger part of it. So that time is about 20-25 years for India. So you should see India do well in these 2 decades. But the idea is to not waste and utilize this opportunity from the best possible perspective. Quickly, developments in the last 10 years before I come to contemporary issues. I will be a little fast in this case, given the time that we have. So many big changes have taken place nationwide GST. And if we had a longer duration, then the success of the GST itself merits some interest. It has been very, very strong, and it has done very well. The last 7 years have seen a CAGR of nearly 10% of how GST collections have improved. Real Estate Regulation Act, RERA as we call that, has improved property rights. It has also improved the cash cycles of banks that fund to the real estate sector. Privatization is on. Many large government enterprises have actually been privatized in now, and we have seen a host of liberalization, which improves ease of doing business considerably. GST, as I said, significant improvement. I said 10% is actually 11%. So yeah, GST is doing quite okay. And this is sort of what the IBC has done. And in all this, the idea is to remain fiscally very prudent. So if you look at the top left chart, you can see the direction of fiscal deficits for India. Very clearly, things were already on a downward trajectory since FY12, fiscal 12. But thanks to the pandemic, things picked up meaningfully. So from 9%, though, we are on a steady downward sort of trajectory. And this has been done without, fiscal rectitude. So capital expenditure as a percentage of GDP has been actually rising. And from a budget, budget now spends 1 in every 5 rupees on capital expenditure. This is the federal budget. And over years, what that has led to is that a number of changes have happened on the infrastructure side. India is less than 40% of Australia's area. India is about 3.2 million square kilometers. Australia is probably 7.5 or 7.6 million, much, much larger. But India does have over 100,000 kilometers of national highways at the moment. This number is simply double what we had 10 years ago. So significant amount of change and more to come. You can look at the national infrastructure pipeline here that shows where these investments have actually happened and what's the way forward. There has been a lot of social reforms as well. As you can imagine, a poor country like India requires significant social support, and this is good news. You can see many things have been done in the last 10 years. At this point, however, a lot more needs to be done from a health indicator perspective, from an education perspective. 3/4 of India has not seen college. So this drop in tertiary education is something worrisome. It's okay to have been like that maybe 30 years back, not at the moment. So many things need to change. And very quickly on the markets now, Indian markets have actually mirrored the economy. As the economy has grown, the Indian markets have also grown. So market cap to GDP ratio used to be around 60%. In 2014, that number is over 130% now. The investor base, these are people who invest in the Indian markets, has risen from about 16 million to nearly 116 million today. So significant increase in the last 10 years. And as I'll show in my next charts, it's a lot to do with what has happened in the last 4 years or so. IPO listings, India last year had the highest across the world, and the capital raising, again, as you can see, these are top ranked or second ranked across the world. So nearly $19.5 billion raised. Mutual funds have become big, and the market cap of Indian companies has risen during the last 10 years from 1.2 trillion to about 5 trillion. So significantly large. That makes Indian markets the fourth largest in the world. And yeah, when you compare India from a per capita income and then you look at its market cap, you see some stark things coming up. Notice that US is large by per capita GDP, and then its overall market cap to GDP. So, but India is at the left, far left. So it has a low per capita income, but still a very good market cap to GDP. You can see in the lower panel that in our cohort of companies, India is fourth actually, so quite large. And this has been rapid. Number of investors has increased significantly. And what's exciting is that the new investors are predominantly young people, in the 20 to 30 years of cohort, years of age cohort. And it has also led to a significant improvement in gender participation. So the number of females that have been there in the markets are there today is nearly 7 times. So, in the last 3 years or 3 to 4 years, things have improved significantly. And, over 9 years, this number has become 7 times larger. So this is India. You can see on my map here, India has, as I said, 110, 115 million investors, and which basically cover the entire country. So we have about 19,000 pin codes in the country, and all but 28 of them, out of these 19,300 plus pin codes, all but 28 of them have some investor at the moment. And if you're familiar with India, you can see and correlate where investors actually come from. So you have 10, out of the major, 29 states. Out of the 29 states, you have 3 states that have over 10 million investors. Yeah, that's the story in India at the moment. And in terms of household penetration, if I start looking at that, the percentage of households that have some exposure to equities used to be about 7%. So 1 in 14 about 5 years back. Today, that number is 1 in 5. So that's the sort of increase. In fact, it's more than 1 in 5. So about 24% of the Indian households are covered at the moment, and which is not the case elsewhere. So there is this OECD study that we had that we've referred here. You can see how things are. So for instance, Australia 20 years back had about 37% of its households investing. At the moment, that number has come down to about 21%. So what's happening? The general trend is that households move towards indirect investments. They invest in the markets through mutual funds. But in a developing economy like India, mutual funds are doing very well, of course, just like developed markets, but so are individuals' participation in the raw markets. Very quickly on contemporary developments now, I won't spend long. Global growth outlook is subdued thanks to what's happening on the trade dynamics. In fact, the latest numbers did have a downgrade of India's growth figures, and risk indicators are rising. So this is something to sort of think about. And you have the major economies here as well. And Trump tariffs, they do weigh on PMIs. So cross-country numbers, if you see, India stands out. Somehow Indians are, I don't know if they are foolishly positive or foolishly optimistic, but numbers have always been reasonably higher than 50 on the PMI, which is the dispersion index, and other countries are far more circumspect in terms of what's happening in the future. And inflation numbers have been sticky elsewhere, but in India, you have seen a significant drop. Growth is quite decent. The numbers that you see on the bottom is not a trend. It's basically what the Indian economy will do by next year. So growth numbers they do range from 6.1% to nearly 6.7%. So, and these are some of the challenges. The Indian economy is not without its challenges. Bank credit growth has slowed down in the near term, thanks because banks have become very circumspect. There have been some, observations from the central bank that said, there is excessive lending in certain segments of the economy. So things have been okay, not great in the banking sector, especially for household credit in the last 2 years or so. Things seem to have bottomed out, though, at the moment. And all other major indicators at the moment are reasonable. Inflation is low. Services growth has tapered, but remains strong. And forex reserves are at 7-month high, thanks to the number. I gave a number of 700 billion. So that number has come down to nearly, it's about 700 odd billion. The actual number is 688. And corporate earnings are okay. I will not say great, given the time series that we do have here. On the right side, you can see how corporate earnings have become more, concave in terms of a growth function, context. And at the moment, we are looking at roughly 6% sales growth in nominal terms. EBITDA growth is better because margins are at their highest over decades. So, EBITDA growth is around 10% at the moment. And who pays, who calculates, who contributes to these numbers, you can see here. So from sales, energy is the biggest player. And in terms of profits, financials are the big profit-making, sector in the economy. And of course, they do invite a lot of regulation. What's the downside, though? With Trump's tariff, the first order, sensitivity is about 30 basis points straight on India's growth. So, but this is simplistic, and one would not want to be simplistic without being complete. So there are second order changes that need to be considered as well when you look at implications on from reciprocal tariffs. And let's understand a lot of this differs considerably over materials. So getting a broad picture isn't actually easy. And from the US, India is not very important actually. So that is also something that, I don't know, might save the country. And this gives you a sort of a comparison of which sectors have contributed to sort of growth. So India is by far a financials-led sort of economy, although by no means it is the only sector. And Indian markets are not cheap. Look at the long-term valuation on the left chart. So long-term valuation itself is around 16.5x forward earnings, and that number rises to about you can see that here. That number rises to around 1.8. So clearly, India is not a cheap market. It is a reasonably expensive market always, but it's always remained expensive. And from a market perspective, again, retail interest has picked up significantly. Very quickly, if I look at the overall market, the market is like what you see here. Mutual funds own about 10%. Individual investors own nearly 10%. Foreign investors own about 17%, and foreign promoters, along with them, they have around 25% of the market. So 17 plus 8% or so. And market participation has led to significant improvements for Indian households. We have shown that number. So household wealth has increased significantly, with implications from a wealth effect perspective, from an income effect perspective on discretionary consumption over the last 2 years or so. And as we speak, the numbers have tapered, but they're not going down. So the number of investors increased by around 21 million in the last fiscal. And while we do not see similar numbers coming up anytime soon, but numbers keep on the positive track. So that's about it. The global economy has two major challenges. India is doing well, and what are these challenges? We will speak probably in Dr. Maitra's lecture on geopolitical risks. But trade dynamics and geopolitics are the big things for India. And because there is domestic resilience, the Indian economy is doing quite okay. Let's understand that India is still very, very insulated from the global economy. by more, not by design, but by its current state. So, and for India, I would summarize that you have to look at the services sector and also see how policy-led initiatives. So there's this idea that India will become Viksit. Viksit means developed. India will become a developed nation by 2047. That's the 100th year of, that's the centenary year of independence from the UK. There are, similar visions for China as well, 1949 to 2049 or so. But India's, thing is what I'm talking about here. So India is in a good place at the moment, thanks to its high growth. And despite global challenges, the current policy initiatives have only helped a lot in terms of sustaining growth, at least for the next, decade or so. I'll stop here. Thank you. Thank you for the opportunity.
Dr. Patnaik, thank you for a wonderful presentation. If we thought looking at India in 10 days was that was not enough, you've given us in half an hour an incredible review of the Indian economy and its future. We thank you very much for that. And now pass on to Professor Pushkar Mitra, who's going to talk about to compare and contrast India with what's happening in Australia. I particularly noted, Dr. Patnaik, your comment that India is very insulated from the world economy. That's not the case with us. We are very much integrated, and the issues around our markets and our investment and what's happening in the world is of vital importance to the growth of Australia. But I'd like to pass on now to Professor Mitra, who will give us some commentary. Thank you.
Thank you very much, Michael. Thank you very much for inviting me to this seminar, and I thank both Prakash and Michael. It's been great interacting with you on a range of issues. So for those of you who don't know me, my name is Pushkar Mitra. I'm a professor of economics at Monash University at the business school there. My research is on South Asia, but I'm what is called a micro-development economist. And so it's sort of, when Michael and Prakash asked me to do this, it kind of threw me out of my comfort zone to some extent. But it's sometimes quite cathartic to look at the bigger picture, because I kind of look at one thing. Okay, what's happening in terms of what are politicians doing? How are politicians behaving in some part of India? To look at it, across the country, across this huge country, is a different ballgame completely. So, growing up in India, to be honest, we didn't know a lot about Australia. To me, the introduction to Australia was in 1977, 78. I'm really, revealing my age. The India tour where Bob Simpson was the captain of Australia, and the first time it's radio commentary, before direct, before a live telecast on Channel 9, it was ABC used to them. That was the Packer era, and that was the whole controversy going on. And so I remember getting up at 5:30 in the morning on winter mornings and listening to the transistor radio, and with commentary from Brisbane and Perth and Melbourne and Sydney and so on. And so that was my introduction to Australia in some sense. And sadly, for many people in India, a lot of people in India, Australia is still cricket, and that, while that's something that has taken a long time to change. It is essential that changes, but it's taken surprisingly long to change. And I'll come back to this and how Australia can benefit from that. But a couple of points about a fantastic presentation by Dr. Patnaik. It really was quite, fantastic overview of what is happening across the country in different sectors. A lot of wonderful things. 5th largest country in the world, when we were growing up, people used to always talk about this Hindu rate of growth. And I'm sure Dr. Patnaik knows about what I'm talking about. This 3.5% rate of growth of the economy, which was between 1950 to 1984 or something like that. And now in the last 10 years, it's been double that. And especially if you exclude the COVID years, it's kind of 6 point something percent over the last 10 years, which is fantastic, right? So, that said, India is a large country. It's a very heterogeneous country. And there are states which have not grown, parts of the country which have not grown as fast as some others. For example, the South, states like Tamil Nadu, Kerala, Karnataka, Andhra Pradesh, Telangana, Goa to some extent, have grown at phenomenal rates, as have certain western states like Maharashtra, Gujarat, of course, for different reasons. Gujarat has grown a lot because of industry, small industries and so on, whereas the South has focused a lot on the IT sector and things like that. Whereas, large parts of the country, what is, traditionally was called the Bimaru states, and now they're extending that. So Bimaru states is this, the word Bimaru means sickly. It's the states of Bihar, Madhya Pradesh, Rajasthan, Uttar Pradesh, and now add to it Orissa, Chhattisgarh, Jharkhand, and Uttarakhand. They have, they've been, let's put it, slower than they've moved along at a slower pace than others, some of the other states that I mentioned before. There couple of other things which are of concern is, in my mind, for example, the issue of female labor force participation, and people, have been concerned. Female labor force, the male labor force participation in India is about 80% something, and it's remained constant between, say, 2000 to 2024. Constant. Female labor force participation has been about 33% at the extremes, sometimes gone down below 30%. Compared to that, as point of comparison is China, the female labor force participation rate is 70%. So, there's been a lot talked about what is causing this. Is it supply? Is it demand? And in particular, just to look around across the border in Bangladesh, female labor force participation, and maybe thanks to the garment industry in a particular case, it has grown significantly. What has happened? And there is a lot of work going on, but Tirthankar, maybe you can tell me the latest numbers. It seems there is a slight upturn, which is a good sign, but there's a lot to catch up on with the female labor force participation
Yes,
story.
Dr. Mathur, you're right. It has picked up significantly in the last 4 odd years, but yeah, there's a very, very long way to go, frankly.
A couple of other things is, for example, this whole talk about whole issue of jobless growth, and Dr. Patnaik had a very wonderful thing about set of slides on the growth of the manufacturing sector, but more importantly, growth of the high-tech manufacturing sector and the services sector, and that sort of means that the small and medium enterprises, the low-skilled manufacturing sector, which is often the driver of employment in many countries, has not happened as much as one would like it to happen. And coming back to these divisions, we always say that, on one hand, there's two Indias. One is the India that of Delhi and Mumbai, and you stand in one of the street corners of Delhi, you see more BMWs than you would see in a year in Melbourne, for example, where the population, you have below replacement birth rates. People take holidays in Europe. On the other hand, you have the Bharat, the rest of India, which is where poverty rates high, undernourishment is growing up. So what I want to say is that it is a difficult problem that the government is trying to address. It is not easy, and one needs to remember that. And it's no way am I criticizing anybody, but India is a very heterogeneous country, very large country. I've just come back from Europe, and it's almost like a continent. Europe, each country in Europe is like a state in India, and it is a large country, heterogeneous country. But changes have happened. When I was growing up, I always laugh and say that the only time we say I'm an Indian is when Indian cricket team was playing. And you can tell me that I'm a great fan of cricket and spend many hours wasting my time. Whereas now, I think the integration has been much, much more, and that has benefited a large part of the country. More needs to be done. But for sure, things are moving in the right direction, because the first thing is to have growth, and that is happening, and hopefully things will trickle down. And Tirthankar also talked about the social development programs, things like Swachh Bharat program, the Clean India program, which has been a huge success, reducing the rates of open defecation both across the country. Internet use has gone up. In the digital payment and technology, as Tirthankar talked about, is fantastic growth. So now, with that in mind, all I want to say is that there are lots of good things that have happened in the last 10 years. Fantastic things have happened. And even the most strident opponents of the current government would say that many, many good things have happened in the country. But there are a lot more things need to be done. And one needs to look at the broader picture and cannot stand on one's laurels. That's all one is saying. The other thing, so where does Australia fit into all of these things? So as I said, for many years, it was essentially, it started with one sea, the Commonwealth, or the two seas, the Commonwealth and the cricket. We need to move on beyond the two seas in terms of Australia-India relationships. It's democratically aligned, one of the closest neighbors. There are lots for both countries to gain from each other. And especially in today's world of uncertainty, every morning we seem to get up and hear of one more new shock that is coming onto the system. So in this context, two things in terms of Australia-India relationships come into mind immediately. One is Quad, and I'm the geopolitical risk and so on. And I think, Michael, you were saying there's going to be a seminar on the Quad at some time. So I'm not the right person to talk about Quad. I kind of read over things. Hopefully it will succeed, but who knows? Given our neighbor, given our friend across the Pacific, one hopes it will continue. But then in this, the other sort of important thing is the Australia-India Economic Cooperation and Trade Agreement, or the ECTA, which came into force in December 2022, right? So that sort of opens up a lot of opportunities, both for Australian firms in India, and more importantly, also for Indian firms to Australia. When we talk about Indian firms in Australia, we seem to only talk about this one big case, which has been in the news, the Adani Carmichael coal mine, and that created so much of fuss across the country many years. But that's Indian investment is more than that. Indian investment in technology. I don't think there has been. Tried to look at the numbers. It's not been particularly big, and the scope is a lot. From an Australian point of view, Australian firms are very well placed to meet India's growing demand for on a range of sectors. For example, mining, technology, other services, particularly relating to mining, and critical minerals and resources, which, for example, supply of lithium, other critical minerals for the growth of the renewable sector. So the Indian government has set very ambitious clean energy targets of wanting to have 50% through renewables. I looked at the numbers. Movement is in the right direction. So in 2016, I looked at all electricity generated in India. So 2016, it was, just give me a second. I don't want to forget the numbers. Just give me 1 second. So it was thermal power, of which coal was the most important one, was about 69%. And renewables was about 29%. As of 2024, coal thermal is about 53% and renewables is about 43%. So it has been a 50% increase in renewables in this. And that's, Australia is very well suited to help India in this, because in this transformation of the economy to renewables. For example, as I said, technology, the advantages that Australia has, the competitive edge they have in consultancy, in providing support for the growth of the renewable sector, and provision of critical minerals for renewables. And of course, in terms of other trade, we saw there was a deliberate push in some sense during the COVID time, when we had all these barriers on Australian exports into China, so that India was seen as an alternative market by the Australian government and the Australian producers, and I hope that continues into the future. The last thing, this is going to be somewhat more controversial. I think there's another thing that is, given the importance of coal in India, while one would like to have 50%, or as of now it's 43%, I would love to have 50% or more on renewables. The demand for energy is growing at such a fast rate that you cannot move away from coal in Indian context, like it or not like it. So in some sense, what Australia has is the better of two worlds. Australian coal is of much higher quality than the Indian coal. So that is sort of an opportunity for, while we don't want, fossil fuel to kind of generate our electricity, in the absence of other alternatives, it's in some sense the better of worse alternatives. So I think there's a lot for Australia to gain from Indian system, and vice versa. And Australia, there's a lot of there's talk, at least in Australia, about engaging in India. I'm not sure, and Tirthankar will be able to tell more, whether there is a lot of talk on the reverse engagement about Indian firms and Indian government engaging in Australia. I want to end with one last thing, and Tirthankar presented this wonderful set of slides, wonderful data, and he, as one of the things that we individual researchers have been facing in the Indian context has been the lack of data. So the government has made a lot of administrative data available, the roads data, the network data, and so on and so forth. But there's no census. There's not been a census since 2011. The national sample surveys have not been conducted since 2011. So I'm going to end with a call, with a plea to people in India, and please try and convince the government to kind of release more data, because without more data, I'm not sure what we learn and whether we can make sense of anything that we learn. So I'm going to stop here. I've already taken more than my time. Thank you.
Professor Matra, that was again in very short time, but you've raised a whole raft of issues and those connections between India and Australia that I agree. In my time working there, we always felt that the knowledge barrier between what is happening in India, what is happening in Australia, and the understanding it's still pretty high, and we need, I think, in programs such as this, to be able to establish and build a better understanding of our two economies.
So please join me in thanking several people. First of all, our excellent speakers, our moderator, but definitely not least, the interns and volunteers without whom this would never have happened. So can we have a round of applause? Thank you. Thank you very much, everyone, and goodbye.